Uh, we're ready.
Yeah.
There we go.
The pop quiz.
I'm just going to start things at YouTube and then I will officially welcome folks.
Great.
So here we are, and we're live on YouTube, and we have 190 people here in Zoom with us so far, and we're delighted to have you with us. My name is Stephen Fetter. I work with the General Counsel Office in the Communications Department, and I'm honored and delighted to be your host tonight and to be able to welcome Eric and Clyde back into this 13th in the series, Lucky 13. I don't know if I've done a webinar series that's ever been this long before, so you folks have started the trend. It's quite remarkable. Friends, thank you for joining us. And let me turn things over to Eric, who is our primary resource person tonight, and let you carry on from there. Eric, over to you.
Yes, good evening, folks. Stephen, if you could put up the slides. I want to say that one of the ways we split this out, some of this work is I follow the policy side pretty closely, and Clyde is my guru, my practitioner. He actually is processing, each of the program applications, and so he's the hands-on guru, and so we'll bounce back and forth a little bit.
Sure. And my
my
role in the whole picture is to collect the questions.
That's it, and we've got Kate Rod helping as well, and perhaps others, Aaron. But
so let me just tell people what to do with questions, Eric, before we jump into the content, if you please.
Sure.
We're going to use the chat for questions. I've disabled the microphones. We now have 225 people in the room, and that's just way too many to share the mic. So please use the chat for your questions. Move your mouse over top of the Zoom window, and all of the Zoom icons will come up at the bottom of the screen. Or if you're on a mobile device, then just touch your tablet or your phone and follow the links towards the chat. Type your message into the chat. I will try to collect the questions. I'll also try to consolidate them under topics so that when Eric or Clyde come to a stopping place, I can just rattle off three or four questions. I'll do my best to capture everybody's question. If they come hot and heavy, I may miss something. I'm only human. We collect the chat afterwards, and Eric and Clyde go through it with a fine-tooth comb. So if there's something I miss live, my apologies ahead of time, and you'll probably get a response from them later. Somebody's asking if the slide deck is available afterwards. Yes. The recording of this is now posted at United in Learning with a link to the YouTube broadcast that is currently being recorded. And a slide deck is there, and the M&S movie that we're going to watch is there, and all of the links that Eric has in his PowerPoint are there as clickable links. So you can get all of that at United in Learning at the recorded webinar section of the website when you need that. Not seeing any other questions right now, so let me turn it over to Eric and invite you to jump right into the content. Thanks.
Well,
Eric.
but just before we do, just really want to briefly recognize the land that Clyde and I are broadcasting from Toronto. I'm down in central Toronto. Clyde is up in Scarborough, or at least used to be. That makes us on the traditional lands of the Huron-Wendat, the Mississaugas of the Credit, the Haudenosaunee, and of course Toronto is home to Indigenous folks from all across the country. So that's something that we want to remember during this this fall. We want to remember that all the time. But I think of this as well as the extended time of Thanksgiving, and just recognizing their centuries of stewardship of the lands. So, perhaps you can just take a moment in your own locale, or if you want to acknowledge your place in the chat box, feel free. And with that, I will move on to the next slide, which regular viewers will know is going to be another key part for me, which is the United Church Creed. And just a quick reminder that of all the times we say this, I mean, we say this all the time. I call this myself the mission statement of the church. When people ask me what we're about, this is the document I cite as a relatively, as a 20 plus year member of the United Church. When it was called the New Creed, I was shocked to know that it had been around for maybe 40 or 50 years, but more recently approved. But if ever we needed to be reminded that we're not alone, this COVID time is certainly one of those. So let's get into the content, and remember that the reason we're here is to be church and to celebrate God's presence. So what we're going to cover tonight, a bunch of sort of admin reminders and administrative things. But hopefully some information that will help you in this most unusual year in terms of stuff we all need to do for year end. We continue to get questions, not as many on the setup, but questions on the church help desk. And of course, just however many days ago that was, I think it was October 9th, a lot of announcements. We now know that all the programs have been extended in some way, and we'll talk about that a little bit. I've got a couple of very sort of hot off the press insurance things that I'll cover as well. And this isn't as bad. I no longer watch the Trudeau or the federal broadcasts. In fact, the federal broadcasts don't even happen daily. But back when we started this journey in April and May, Wednesdays, I would always watch the federal announcements just to see if I had something new to tell you tonight. That's abated somewhat, but this is the best information we have. It does supersede all previous webinars in terms of end dates and in some cases eligibility and stuff. Next slide. So again, we'll start off with a reminder that so much of the work we do as the broader church, in fact, the lion's share of the work we do as the broader church is funded by the Mission and Service Fund. And we do know that during this COVID time, especially, where we've all been managing cash tightly and so on, but we just remind folks that transferring mission and service designated gifts or any congregation donations as you're able, we really appreciate what you can do on that front, because we've already dispersed it, right? In terms of global grants, the theological schools, grants to community ministries and so on. So it's a key number for us, and if what you can do to get those monies in will be very much appreciated. Next slide. And I like to burn a candle periodically, and again, this is just a reminder that we've been gratified through this time at the response that folks have had to, as bad as COVID might be for us, it's a lot worse in other parts of the world, and we've had good response to our ask that people support folks around the world, as well as trying to work this through ourselves. So thank you very much. Next slide. Okay, so the help desk, and I think most of the folks on this call will have done this, but just a very quick reminder that you have to be online to take advantage of any of these programs. Most of you are now. Almost everybody is. The help desk has helped a whole lot of people work through the more complicated cases. If you aren't, just a reminder that it's there for you. Next slide. This isn't even my slide. This is for Green Shield, our benefit provider for church staff. But the idea that we all have to get more and more electronic. The church, the national church, pays all our social ministries across the country, all our grant recipients. We have now on EFT. And it's way better if you can have your bank information now with the government on your My Business account. And we're just going to keep needing to do this. Not just direct deposit, but also doing your stats online. Looking, your insurance bills are already sent electronically. The assessment statements are online, and we're looking for ways to improve the tools that support that so it'll work on all computers. But one thing this pandemic has done is catapulted a lot of the more reluctant of us into learning these tools, or in my case, calling my kids over to update my systems so I can use all the tools. In some ways, that's going to serve us well. Next slide, please. And again, I've ordered this more around governance. All the wage and rental subsidy applications you're doing do not require regional approval. We're taking that view on rental programs. Loans do. Typically a congregation board approval. All the regions, I think, have expedited loan approvals for you. And we have an online application. I also want to say here that one of the areas that I recommended to you in the spring, I'm taking that off the table. The idea that we would nationally sign on and guarantee local loan applications, that's turned out to be a pig, frankly, in terms of the amount of paperwork. The banks have really tightened up their rules and procedures for that. The amount of paperwork that it's throwing off. So what we'll be doing is, if a local line of credit, it falls through, or if you need a larger one, my own bank, the national bank, has asked us to run our loan programs, and we've actually obtained more funding. We've got a line of credit that we're going to use for congregation support if we need to, as we come out the other side of these programs. So what I'm saying is, if you aren't getting a local line of credit and you need one, there's a national option. Next slide, please. So these are the questions that we've been answering so far. I thought we'd get out in front of it. The queues, payments with the 75% program, the 10% program, are government grant income to you. And my advice, and actually it's not mine, it's Clyde's, is that even split that line out on your accounting statement so it's nice and easy to find and reconcile the two types of grant income. And if you have other grants, probably a good idea to split those out as well. These government payments do not count in future calculations of your revenue for determining eligibility of programs. We've covered that a few times, and they don't count in as revenue for denominational assessment either. What we are seeing, I haven't heard too many churches yet, but the audit process, the federal government, the CRA, is now beginning to audit CUES payments. So I've got an example of the 9-page letter that they send, and they ask for all kinds of documentation. So make sure that if you've applied for one of these programs, it's a good idea to have that information ready. They do give you 30 days to respond. But rather than make it a crisis, I think we've been saying all along, document everything. Be able to show people where you got your numbers. It isn't too late to apply for anything. All the dates for all the programs have been extended. The one thing I will note is, and those of you who might be doing the current rental program, the CECRA, that's based on whether you were eligible in April, May, and June. And, it's an automatic extension, but the deadline for that is this week. And,
automatic, but you got to apply for it.
Yeah. I mean, if you apply, they send you a check, but if you don't apply, you don't get it. Thanks, Clyde. And there are a lot of people asking still about the 10% program, and my saying trust the system is getting a little old, but that's still my answer, and we've got time. So next slide, please. This is an email that's going to, not all of you are treasurers, so you may or may not get this email, but I want to highlight it because someone in your congregation or pastoral charge should deal with it. There's an email coming out that basically about insurance. Every congregation, every pastoral charge has directors and officers coverage with a national umbrella policy that we've arranged for some years now. It's free to you. It's not free to me, but it basically ensures that everybody has D&O coverage, and it's pennies on the dollar when we have it on aggregate as opposed to individual congregations buying it. It's literally 15 or 20 cents on the dollar for us to do it this way. We are changing carriers. The insurance market is really tough right now. It's hardening up. I've told you in the past, we negotiated for months to limit the increase to 30%. I've never bragged about a 30% increase on a cost in my life. Now, a number of companies are getting out of the directors and officers business entirely, including the company that we're currently with. So we are going to have coverage. It will be effective December 1st, but every congregation is going to receive an email this week, the treasurer, and you're asked to report any potential claim that you might be aware of. You don't have to respond. There's not a negative, like it's not going to be, you must say no, but you're being asked to respond because it wouldn't be covered by the new company who take on the policy in December. So the letter explains this in some more detail, but the message will come out, and for 99% of you, technically no action is required, but it's one of these things that if there is something out there, report it, or you put yourself at risk later on for folks saying that it's not covered. Next slide. So this is going to be a big theme tonight. That was then, this is now. Every single program that we've talked about, that all these special federal programs have changed. If you were to go and look, remember the days when we were looking at March and the 15% reduction in revenue in March? Back then, there were no revenue parts to the spreadsheet or the calculation. We did all of that offline. If you went back now to claim, the revenue components that you've seen on recent spreadsheets are there. You literally will put your revenue numbers right on the spreadsheet. So things have evolved as it comes along, is basically what I'm saying. Back then, online access, lots and lots of us didn't have it. Okay, we more or less figured that out. The government told us that there'd be reporting requirements, but then we had no idea what they were. Now we're kind of finding out, and now we know in many cases. There were a whole bunch of things that churches weren't eligible for a time. The SEBA loan was an example. We weren't even sure if the rental program applied. Now we know. The evolving processes continues, but they're really, really good. Like one of my messages is you don't have to know a lot about Qs anymore, or your calculations. You need to have your employee compensation data to input, and you need to have your revenue data to input, but the spreadsheet does all the work. Something that's been confusing people is the attestations, the little statements you need to sign off on. They keep evolving too. Well, last week or a month ago, there was 7 boxes. Right now there's 10 boxes. A while back, there was 4 boxes. Theoretically, when you processed your claim, you would have printed one of those out and have it on file. And it's good. It doesn't matter that the form has changed. If you didn't print one out, you'll just have to use the most current one because the older ones aren't anywhere. So the fact that things were changing almost weekly, now, I think this next batch of announcements will probably be it for a while. I mean, the programs, the main program, the CUES program is being extended to June, but we only know the details up until December. So you're going to see this slide a lot. That was then, this is now. Next slide, please. So these links are still good. I just tested them, but just in case there's anybody new, the two programs that I'm going to say now everybody has some degree of eligibility for. The 10% program was for charities and small programs. Hopefully that's more or less done. You've either claimed it. If you haven't, the way to claim it now is to use the worksheets that are on the payroll page of the national website and do it yourself. But almost all of you have done it. The 75%, and it will be a sliding scale, you have to go apply for. And all the stuff online is one of the weird things is it's updated constantly, but they don't tell you. So you have to go look. Everything's been improved. They've dealt with exception situations and so on. They are a really good resource. Okay, next slide, please. So the CUES program, I'm not going to harp on what was then. I'm going to focus on this slide on how things have changed. But again, a little bit of what I've said. It was originally a 15% revenue fall in March, 30% after that. Now it's any revenue change potentially, or any revenue decline potentially makes you eligible for something. So I've been saying that virtually every church is in a position, whether they choose to or not, to process a CUES claim. The program's been announced, extended to June. However, any details we have are only, and the part that's approved by Parliament and so on, is only through to December. And even there was going to be a slide, when I talked to you in August, there was going to be a sliding scale. They've beefed up the CUES for this fall. It's not 75%, but it's got 65% is the target number. When I typed this a few days ago, the calculator was confirmed and everything was there for working for period 7, but it's there for period 8 now as well. Just I think yesterday or today. For those of you who are working that currently, the period 7 data is there. The attestations and calculators all seem to work. We're not aware of any data integrity issues at all. And basically, the big message here is if you have your data, if you have your revenue comparison data, it's there. The spreadsheet does the work. You can trust the spreadsheet. I'll stop there. Next slide, please.
Just
go ahead, Clyde.
For a second here on that spreadsheet. I have checked all the done manual calculations and verified them for all 7 periods up to now. Mm-hmm. So to make sure that they are working within reason. And you can still go back, if you haven't done them, you can still go back right back to period 1 and bring it forward. And even if you think you haven't met the reduction required from periods, put the numbers into the spreadsheet and let it tell you whether you've got something or not. Use the spreadsheet. It's pretty decent.
Yeah. And I would say it's worth folks, even, we're Clyde and I are both probably spreadsheet geeks and like spreadsheets, but it's worth putting your revenue, knowing what your revenue numbers are and putting them into the spreadsheet just to see what it does.
Yeah, the calculator actually works as well, and that's the option, and that's a lot easier than the spreadsheet.
Okay, so that's the CUES program. Next slide, please. So just again, what the periods are, this hasn't changed. This is the same slide as last time. One thing I want to highlight is that you do have a one-time option for periods 5 to 9 to change what the month comparisons. Okay, we're going to get into that in a bit more detail. But if you've been applying, then period 8. It just opened this week or probably yesterday. But these are the periods. This is where we know exactly what the calculator is going to do. And then for December through next June, I think we can guarantee that there'll be some degree of sliding scale again. That'll be what the government has in mind. But that could change. They've stepped back already, even this fall, they stepped back from their sliding scale because of the second wave of COVID. Next slide. So I just want to stress this one-time option to change reference periods. If your revenue is relatively even through the year, and therefore, even or relatively similar year over year, then you don't need to change. But if you were comparing, say, March of 2020 to March 2019, this scale could work for congregations. Changing your method could work if your revenues are relatively skewed towards year end. In my church, my own church, more revenue does come in at the end of the year. A lot of it comes in response to our stewardship campaign. We have a significant PAR component, but to the extent that you have a skew of revenue towards year end, it might be worth having a look to see what your average of January and February months is, because you're allowed this one-time option. I'm not using it myself. It doesn't make sense in my context, but it might in yours. So again, the choice way back in March was you could either use year over year month comparisons monthly, or you could go back to the average of January and February of 2020. You have the option here of switching your method. And as I say, if you had lots of rental income back in January and February that you don't have now, or even events, then this probably won't make sense to you, or won't be applicable. Yeah, and Lori here is noting, if you do change for period 5, for example, you need to carry that through for all those periods 5, 6, 7, 8, and 9, and who knows, but probably after that as well. I'm not sure the government is going to keep flip-flopping on the methodology. Next slide, please. So this is the election form. Now, I looked at it 2 days ago, so it might have changed again, but this is the election form that is currently online, or if you're doing a CUES application, and there are the 10 or however many boxes that is. I've listed here the elections that are more common. Again, for certain pastoral charges, we've been using the notion of either combining our revenues and reporting it together. That's for pastoral multi-point charges, where the payroll number might be at the charge level, but the charitable status is down with the points. There's some boxes here that don't apply to us for sure, but if you're basically cash method is something you'll want to tick, many of you. Excluding asset sales is a box most of us will tick. And the box 7 is the one where you get to change your methodology for which months you're using. So I hope this is helpful. If it changes again, we'll keep you posted. But right now, this is the one that you would be ticking off certain exceptions. I don't think the CRA is going to get really uptight about this. The references, it's all the same section, 125(7) bracket 4 bracket whatever. Nobody's reading the Income Tax Act, right? So I don't think you're going to get in tons of trouble if you mess up ticking a box here or there. But this is our best understanding right now. Clyde, is there anything you'd add to that? You've filled in way more of these than I have.
I have filled in a lot, and I sat in on a webinar this afternoon talking about the audit process. And one of the things that they will be looking for is whether your church board, they were talking corporations, but let's talk church board, has known that you're applying and or making these elections. So I would make sure that you've discussed it at the board meeting just to be on the safe side.
Okay, thank you. Anything else come up in terms of the specifics, or are these very brief notes sufficient?
No, what we've done is very reasonable.
Okay. Thank you all.
Before you go on, I've got a few questions here about the CEWS. Can you remind us what CEWS stands for?
Well, let's see. That's a real test for me. Even I believe it's a Canada Emergency Wage Supplement.
Right.
And it's the larger supplement program. The other one is the temporary emergency wage subsidy, or which was the 3-month program back, what I call the 10% program back in the spring.
Yeah, the government's referring to TWS only now. They were adding the E on the end for emergency, but they dropped that.
There we go.
Well, that's good. We don't need to we don't need to do a whole long time on that. Somebody just asked that, and so I thought I'd let you answer that. Gene asked way back when, can we add pulpit supply to the queues?
The short answer there is no. Pulpit, again, it needs to be people on payroll. Mm-hmm. Stuff that you're reporting, typically you have a payroll provider, typically it's ADP, but they need to be on ADP or on your payroll system as employees, where you're taking source deductions. If you're just giving someone a T4A, which is typically or usually the case with pulpit supply, that does not apply.
Thank you. So the queues is dependent upon our income. What if we receive a gift in kind? Does that, how do we report that? Does that change our eligibility for a level of queues? And so Doug is asking also about United Church assessment.
Okay, great. Well, a gift in kind is revenue, mm-hmm. Although lots of us don't necessarily book it that way. But like, let's use the most money-based example. If it's a stock gift, it's still revenue. It's absolutely counted in your revenue. If it's a box of photocopy paper, or I once donated a fax machine to my church because I was so pissed off.
Anybody use those anymore?
Not anymore.
Yeah. So my point being, that counts as revenue. But many of us, I think, aren't necessarily accounting for gifts in kind as revenue. So the short answer is yes, it counts, but I put that little asterisk there.
Thank you. Okay. Anne was asking about she was using the January, February 2020 cash basis as the base of revenue for her comparison. She didn't use 2019 to compare. Can we compare for 2019 for period 7 and above? I think you said that you could make a switch at period 5, but then you had to stick with it.
That's right.
You're right. Okay, good. Thank you.
But I do
Peter-
think you can switch in period 5 to go either way. Clyde, is that
Okay.
correct?
Yes,
But once you apply for a period 6, then you're stuck for the next.
Yeah, once you do, whatever you do for period 5, you need to keep going. Yeah.
at least
Okay.
to period 9.
Okay.
Yeah.
So,
Anyone who's
Peter-
new to this, we hedge some of our answers because, and it could all change again tomorrow. No, there will be program refinements in December for sure.
Okay, questions are coming in hot and heavy now. So,
Great.
oh, somebody
I think
has.
my next slide is question slide anyway, but that's fine.
Oh, good. Well, that's
Yep.
good. Somebody is asking, is pointing out that they have people donating hand sanitizer. So, good for you. Have the cleanest hands in town. Peter says we sold property and closed in December 2019, so revenue for that month was enormous. What's the best way to deal with that in the Q's application?
Well, first of all, it's from an asset sale, so you have the option of excluding it. So that would be my easy answer. But my broader answer to everybody is don't get twisted in knots about a particular month. Okay, trust this. Like if it's revenue that you properly need to report it on the spreadsheet. And something like that could create a bump. Like there's a moving average calculation. There's all kinds of stuff in the spreadsheet. But just trust the spreadsheet. It's going to do what it's going to do, and you have to, you need to be truthful about your revenue. But in the case of the sale, which was the specific question, one of the boxes here, you specifically get to exclude it.
Okay.
One of the things they will be checking on audit is consistency with the way you've done bookkeeping in past. And as long as you're consistent, you're not trying to defraud.
Well, and that goes along with Eric's continual advice to keep notes and of all of your assumptions. So the person who was asking about whether they could switch at period 7, they've already filed for period 5 and 6. Can they go back and switch the way they were reporting and amend their application for period 5 and 6?
Well, it strikes me as a ton of work. You'd need a really compelling arithmetic reason to do that. You might as well keep going would be my advice.
Thank you. This attestation form, who signs it? Can the treasurer do that?
It needs to be a charge, someone in charge, senior treasurer. Like in the corporate land, they always say CFO or CEO, but treasurer is fine. I mean, at the end of the day, for us at church, it doesn't matter. The whole congregation's on the hook, right?
Sure. Couple of people asking about queues for employees who are not being paid through ADP. Are we required to pay our choir leader through ADP? And if we don't, can we still be eligible for queues?
The first test is, are they an employee? You're paying someone does not make them an employee. You're taking source deductions. For example, EI deductions come off first dollar. So if you aren't taking EI deductions, there's no way they count for the CUES program. If you are taking those deductions, my big advice has been for a long time: get everybody on ADP. And frankly, we're going to shortly be announcing steps around how we're going to make ADP easier to work with, so that you don't resist doing that for folks who have variable pay. But they must be, an employee is someone who has source deductions, full stop.
There were lots of people commenting on our discussion about faxes, saying they keep their fax around because it's the only way ADP will communicate with them. Is that going to change with your new proposal?
There's a plan to change all of that next year. And frankly, we are going to be moving to full online data entry and control and reports that work on all systems. We'll have way more information on that, in our next webinar when we look forward to 2021. But I don't even own it. I threw out a fax machine I kept at the cottage. Just don't get me started on fax machines.
People are dancing in the aisles at this one. So
yeah.
Thank you. Memorials, building fund, and estate bequests, are those included in a revenue calculation for CUES?
My answer, Yeah, Clyde's answer is the same. Bequests are an interesting one. I replied, I think, to Elizabeth this evening, and I said, you know, you'd be tempted to make the argument that it's extraordinary, but for a church, it's not really. It's infrequent, but memorial gifts are, and building fund contributions are part of regular, normal revenue stream. And the only thing that you could remotely consider excluding, and if you did, you'd want to document like crazy, would be a very, very unique capital campaign of some kind, where it's clearly extraordinary. But the short answer to that question was yes.
Thank you. Couple of questions here about insurance, and other than that, I think I've caught the questions that I saw. If I've missed any, folks, put them back in the chat so that I see them again. Directors and officers insurance, couple of questions here. If it's available through the United Church, should we cancel it on our own policy?
Well, you actually, this is more of a communication thing. It's been available for since 2010. It's been free and automatic. So the short answer is yes. You're actually, you're paying, that's a saving for you.
Okay.
You know, if you have that coverage, your coverage would respond first, but the umbrella coverage is there for all congregations of all sizes.
And what about for church camps?
Church camps are corporations, and corporations have to, again, have a separate board and so on. And the technicality is that they need to have their own insurance, DNO or otherwise.
Great. Another question on Qs has come in. Do we include M&S donations or provision grants in the revenue calculations for Qs?
Yeah, we've taken the position that M&S donations not count, because anything that's pure flow through, we've said shouldn't count because it's going to be counted somewhere else. The CRA may come back and challenge us on that, but on balance, we've said M&S shouldn't be counted because I'm counting it nationally. On the provision grants, it is a grant from a different part of the church, and probably should be counted.
Another question about Qs, capital gains on investments. If they cashed in a bond or cashed in a stock and there was a capital gain on that, is that revenue?
It depends. If it's just on a stock, like literally a transaction of that nature, then the answer would be yes. If you have interest that you're receiving on a GIC, if you cashed in, fluctuations in your investment account, though, the answer would be no.
As long as they're unrealized.
That's
well,
right.
no, even realized gains within an investment account.
Okay.
Are
Well,
on
these people
account.
took some of their capital gains, I think, to kind of subsidize their budget shortfall.
Yeah. So again, there's two different things there. There's the whatever happened in their investment account, things moving up and down, the investment manager selling and so on. Those are on account of capital and don't count. And even taking money out doesn't count. If you have, but the thing is, if you have an investment account, if it's just an individual stock, or or you regularly receive GIC income, that does count. And you really want to be careful documenting your assumption here, because I hope the distinction is clear. If an investment manager is realizing some capital gains in your investment account, that doesn't count as revenue because it's on account of capital. You're taking money out of there, doesn't count either. That's just cash. But if your regular accounting system is such that you have GIC income coming in, 3 times a year or something, that would count. Clyde, how'd I do? Just
Think you're reasonable there. What most people would look at as unrealized gains don't count, but if it's realized, you've got cash in the bank that you can control the use of, and that counts as revenue.
Yeah.
Okay. So what about, things were all over the map in the spring, and some of us were making claims on our applications about this is what we expect to get from the temporary wage subsidy program, and in fact we got a little more or a little less, and so there's some kind of reconciliation that needs to happen. Should we be having a little fund to kind of cover shortfalls, or should we be preparing for some kind of reconciliation so it doesn't come as a surprise? And when will we get a sense from ADP not only what we thought we were going to get, but what we actually got?
Okay. Well, I'm going to say that one I'm going to punt for a second because I got a couple of slides on that coming up.
Perfect. Okay. Okay, extraordinary income. How do you feel about a contractor who specifically donated all their payments back to the church because it was closed due to COVID and would never have done that otherwise?
I would call that a significant stretch of the word extraordinary. It's very nice. It's very generous. It is extraordinary. But I think the CRA would be more. It's still just a donation.
Okay. We are conducting a fundraising campaign to pay for solar panel installation just completed. Is this revenue? Very specific tied purpose.
Yeah, it's that's a tricky one.
When
You
did
want
it
to argue
start?
Go ahead, Clyde.
When did it start, the fundraising?
Does that matter? Tell us why it matters, because I can't ask the person here quickly.
Okay, why it matters is if you were doing it beforehand, I would consider that to be almost like a building program,
Thank you.
a building fundraiser. But if you started it after COVID started and we were into these programs, it's a fundraiser and you're trying to just raise some dollars. It's going to count as revenue.
Terrible. My congregation had opened a roof fund in Thanksgiving 2019. And we've considered ours that way, that it was very specific for that purpose. It started before the pandemic, and donations coming in for that designated purpose we haven't included. Sounds like we did that one right.
Yeah. So I want to stress, though, that on something like this, document your assumptions and know that there's some risk, because the official CRA answer, and I've asked this of the most senior officials on these incredibly weird calls, is it will depend on the specific facts.
Yeah.
So know that whenever you're making a judgment on an extraordinary or an exclusion, just know that there's some risk there.
So the solar panel person has now said they started this month, October 2020.
Unfortunately, I would say that's revenue current.
Yeah.
Okay. Thank you. I'm going to close off the questions at this point because that's the end of my list. So let's
we'll keep moving then on the slides. So that's why I thought this was funny, Steve.
I anticipated you. There we go. We've worked together for 13 times, Eric. I can read your mind now.
Yeah, no, just
a scary thought.
So you were one slide early. I was going to let it go. Okay, next slide, please. So T4 reporting. This one will be really quick. One of the things that I didn't believe would ever get done, apparently it's going to get done. This is pasted from the CRA website. No one needs to care. More correctly, if you have a payroll provider, you're on ADP, you don't need to care. ADP will take care of this, but they need to use their computer programs and their buckets and stuff to come up with splitting out employment income at the individual level and at the T4 summary level for these buckets. And this is to track SERB payments and all kinds of other things. Short answer though here is you don't need to care. The T4 requirement, which is one that I was worried about, is going to be 100% taken care of for you if you have a payroll provider.
If you're not on ADP though, this is based on date of payment. But so you've got to make sure you get the right date in the right bucket.
Yeah. And I'm just going to say that there should be, I mean, we have a really small percentage of actual employees who aren't on ADP, but just want to stress that there's all kinds of, this is just more and more of why you want to get on a payroll service. And we are going to be removing most of the headaches associated with the current service model, like fax machines. Next slide, please.
And maybe
So
Internet Explorer that nobody ever allows us to use anymore.
that too, yes. On all devices, all software, just normal portal stuff, right? Like, you go on the internet and whatever you're using, you just click on something and go in.
People are dancing again here.
Yeah, there we are. So this acronym is the 10% program. It was time limited. It was back in March, or I guess April, May. So it was a time limited window. The only thing that's changed really is, well, two things I would note is if somewhat amazingly you're one of those people who didn't sign on to have ADP do this for you and haven't done it yourself, you can still do it. So that's point number one. Point number two, one thing that's changed big time is the government has come out with their requirements. Okay, it's this PD 27 form. I have a slide on it in just a second. We're really close. I hope to announce today. I actually had planned to announce today, but either ADP is going to do it for you entirely, or they're going to give us all the data you need to do it yourself. But I'm pushing pretty hard to have this done for us because they're the ones that have administered it for so many of you. I have talked to one or two congregations where people did their own and have submitted their PD 27, and they've already gotten calls from the CRA. The main thing the CRA cares about is the cap. They're just basically looking to see what your total payroll is. Did you take 10% or not? But the message for you folks is hang in there a little longer. The plan is to have this made simple for you, because I certainly can't tell just very easily, just which bucket folks have taken money from and all of that. So you should be getting a specific report. If you want to know how this works, in case there's anyone that new who are still thinking of applying, use the link that was provided earlier. And know that you can claim up to 10% of 10% of salary cost, and there's a capped amount of 1,000. I think it was $375 per employee. Next slide.
So just while you're talking about this, ADP is still doing this, then we can work through them?
Oh, absolutely. Well, you are working through them anyway. You don't have enough information yet to fill in the form, I don't think.
But no, if they didn't ask ADP to do this in the spring, can they do that now, I think is the question.
No, the answer to that is no. However, I'm thinking there'd be relatively few folks. If you needed some guidance, it's covered in considerable detail on the earlier webinars. And I think that there, I'd suggest you send an email to CRA help, which will be featured here in just a minute.
Thanks.
So we're down to, you might recall in the spring, I told people that depending on the size of your income tax bucket, it might take a while. We're down to, I think, less than 100 congregations. This would be the smaller ones, where we're still taking money to reach the maximum. Those larger churches, you would have 2 or 3 months it would have taken to get payments, and you'd max out. But there's less than 100 now that we're still taking monies in October, and then we'll be back to you with the PD 27 requirements and so on. And these payments, as you know, show up in your bank account with some mention of ADP in the subject line. Clyde, is that how they show on the subject line?
Definitely, yes.
Yeah, I know this is getting old. Trust the system. Eileen Dye is just doing an incredible job helping individual congregations. But if your question is, where's my money? Hang in there just a little longer.
We're testing your patience.
Yeah, no question. But we have got a great team working on this, but it's frankly overwhelmed a number of us, me included, at different times. Okay, next slide. So this is the what the and again, this just showed up online, but this is what the form looks like. You're gonna for each pay period, you're gonna need to show what the pay period was, the compensation, what income tax there was, and then how much you took out of the bucket. That's what it comes down to. That's what this says. That's what the program is. Again, it's to be signed by a treasurer or authorized officer, which is why I'm hoping to have a way to beat that a little bit. If ADP were to do the entire form for us, we still have a signing requirement. So I'm just trying to figure out how that's going to work. Next slide. Okay, the CEBA program, for the acronym persons out there, CEBA is the Canadian Emergency Business Account, which was a $40,000 loan program. A lot of fuss earlier in the year on whether churches were eligible. Only some churches are. Okay, it's really important to stress. You must have income on line 4610 or line 4630 of your T3010, your annual charitable return. That is not even half of our church. Well, it might be half, but it isn't all of you. You have to decide whether you qualify or not. If you don't, there's nothing to discuss. You just get rejected. Even if you do qualify with those amounts, some banks have been turning us down, and I've had to write letters of support pointing out the wording, which I'm going to show you in just a minute. So this program's changed pretty dramatically. This program had deadlines originally. I think there was an August deadline, or certainly there was another October deadline. It's now been extended to December, and it's been topped up. So those of you, and there are dozens, if not hundreds of you that have this loan, there's an extra 20,000 that as far as I'm concerned, if you got the first 40, the next, it should almost be automatic that you get the next 20. And again, a bigger part of it's forgivable. So a total of the loan, if you have 60,000, 20,000 of it could be forgivable. Again, those of you who have got the 40,000 loan originally, 10,000 of that was going to be forgivable. If you top up, a further 10,000 of the net new 20,000 is forgivable. I hope that makes sense. There's been greater clarity on deferrable expenses, and they're normal, operating expenses. It's compensation, it's building costs, all our normal stuff. And you don't have to spend the money on this. You just need to be able to show those costs in the year 2020. Clyde, you've done a bunch of these.
Yeah, it's in the actual year of 2020, because even if you paid an annual bill for your insurance, for instance, back in January or February, that can be included in the non-deferrable costs. So most of us with payroll will meet the requirement. But if you've got other expenses like that for your building, you're good.
Yeah.
So minister's salary qualifies as a non-deferrable expense?
Definitely.
And do
Just
we
ask
need
any
regional?
minister.
I'm grateful. My family thanks you. So do we need regional approval for the extra 20,000 application?
Now, this is where I haven't checked with my regional colleagues. My answer would be no. And if a region disagreed with me, I can guarantee you that it would be expedited. Any review would have been considered on the 40,000, and half of this increase is forgivable anyway. So
the congregational
yeah,
board,
I would not create overhead. The spirit should have been that at least get your loan approval at least once.
Okay. But it certainly should go to the congregational board.
Oh, absolutely. No treasurer should be hung out to dry here, on any of these programs. Clyde mentioned earlier, even if you're applying for wage subsidies, your board better know that.
Yep. Thank you.
Same
And
for
so
the
that
loan.
program is open now. We could do it tomorrow.
This, the SEBA one?
Yeah, for the additional 20 grand.
Yes, it is.
Thank you.
Yeah. Okay, next slide. This is for, so again, this is a recap. You must have payroll of up of 20,000 or more to qualify. Of course, we're all eligible now. I'm stressing the two lines that you need to have. This is, again, if you repay the loan before December, the dates have moved now, December 31st, 2022, you can have forgiveness of up to 33%. That's 20,000 out of the 60,000, or it'll be 10,000 out of the 40,000. One thing to note though, if you're, I'm not sure why you would do this, but if you repaid the loan this year, you must, it would be considered, there'd be no forgiveness whatsoever. Like, I mean, the only reason this could happen is if you did it by mistake. There might be one or two of you who applied, got the loan back when you weren't eligible, and then if you happen to have reversed it rather than waiting and seeing until we were, you might have some logistical headaches trying to reapply. But if you do, send that along to CRA Helps. And as Clyde noted just a minute ago, all non-deferrable expenses for 2020 can be included in here. Next slide, and this is a key one. You've seen it before. I've had to provide this in writing to 3 credit union presidents and several bank branches across the country. A lot of folks are still, local branches are hung up on the wording that excluded us originally from this program. So this is the up in the yellow is the wording that was in the regs until June. Here is the current wording, and the current wording makes some of our churches eligible. So if you bump into that problem, you should try yourself to give folks, help them understand this distinction. I'm just seeing a comment from Florence to everyone. We're worried about interest charges. This loan is no interest until December 2022. So you shouldn't be worried about interest charges. The part you want to worry about is if you don't think you're going to be able to pay it off fully by then, interest will start to accrue after December 2022.
Yeah, she's clarifying though that they gave it to her on a Visa card. So she's worried about paying Visa card interest rates.
Oh, I think that's just the vehicle for how they do it. Or some financial institutions, there's no interest charge until 2022. Clyde?
You'd have a positive balance on there, so they wouldn't be charging for that. They only charge if there's a negative balance.
Yeah. And again, there wouldn't be a negative balance because, but again, this was one of the ways for certain financial institutions to do it in a really fast way. Next slide, please. So this is the language, which again didn't exist early on, but you don't want to. I've had a number of congregations saying, "Hey, could I, use this to throw it into my roof building campaign type thing?" You want to be careful to make or to reduce debt. There are specific exclusions that you can't use it for, okay? And this is the language. Try to, almost everyone will qualify with their non-deferrable expenses. So I would strongly recommend against, trying to use it, just for cash flow to pay it back real quick, or you want to be careful if there is a roof campaign, for example. You need to be able to make the argument that roof repair is non-deferrable. Next slide, please.
So does all of that money have to be non-deferrable 2020 expenses, or now that they've expanded it, could non-deferable 2021 expenses, at least from the spring, also be included in that?
Yeah, no, the test right now is 2020 expenses.
Thank you.
And I'm always testing to see if Clyde nods his head because, as I say, he works with this every day. Next slide, please. So this isn't one a lot of you used, or at least not to my knowledge, but there's some dozens of you with lease arrangements that went through the hassle of this program where you had to get the various information from your tenants and stuff. So the program itself ends now. As I mentioned earlier, there's an extension. If you were eligible and successful in claiming the months of April, May, June, it's an automatic to get one more payment, one more month out of that. But the government, and you may have read in the papers or wherever on TV, this program has been roundly criticized and underutilized just because of complexity and so on. So the new program is a good one from my perspective, in that if you have tenants, they can apply themselves. There's nothing, they need to show their, it takes a significant administrative burden off of the church treasurer, and right now that's good news as far as I'm concerned. The other thing is and there's still more to be announced on this. There may be a few churches out there that don't own their building but rent from someone else. So this could potentially apply to you. Probably not, though. The revenue drop shortfalls that they're talking about for this program tend to be more directed to restaurants or even daycares, all kinds of things where their revenue has gone virtually to zero. So I don't think this will apply to many. It'll just take a bit of a paperwork burden off people like Eleanor Morrison or other folks who I know have successfully applied. Next slide, please. So church loans. So we have this right now. It's a $10,000 emergency loan program. We got a generous grant from the United Church Foundation, as you know, to help fund this. I was also offering the paperwork of guaranteeing local lines of credit, but basically that's proven to be not nearly as smooth as we had hoped. I've just made I need to sign the paperwork and get a final approval, but I've just got a major line of credit nationally that we plan to have available to support congregations' line of credit needs. Not longer term debt, but where you need some short-term float type thing. And RBC, our banker, would prefer that we lent that money to you rather than have these guarantees out there that they can't track as easily or measure. So we have a considerable capacity to help bridge this COVID situation, particularly as the federal programs wind down. Again, this loan program, it has been utilized so far by about 70 churches, I think, and we expect there'll be more, and we may need to increase the amount. For a smaller church, the $10,000 emergency bridge works just fine. For a larger church, that doesn't really solve a cash flow problem. So we are going to look at scaling that up in some way. Next slide, please. So this is back to SEBA. This is one thing that changed yesterday or today, one of those. If you have a business account, you can apply online. That's great. I say apply online no matter what. If you don't have a business account, you're now eligible. That's one of the announcements that just started for this week for the SEBA loan program.
That's a banking business account.
Yeah,
in the bank.
That's right.
Yeah.
So there are, I don't know if there are churches still working off a personal account structure.
Yes, there are.
And Clyde says there are, so there must be. That you were until now completely knocked out of this program. You're now eligible, and you can talk to your bank and say, hey, this is still an account for the church, even if it's not one of your fancy business accounts. Is that fair? Okay, next slide, please. So now, just a bit of a recap. So preparing for year end, the PD 27, which is the 10% program, is going to need to get done. We're pushing, one way or another, for the folks that signed up for the program to have ADP do this for you. That is going to get done in some fashion. As I say, either ADP will prepare the form and get it to you somehow for signature, either that or they provide all the fields you need to do it yourself. One way or another, the last piece of work on this is going to be helping you meet the compliance requirement. The T4 is the T4 reporting, again, for employees with source deductions, is going to be done by ADP for 99% of folks. If you have a different arrangement, your payroll provider, whatever that is, will need to do it for you. Again, just the assessment statements, all of you should have or know, at least know where they are. The assessment statements have been updated online, and there was a broadcast earlier this month, pointing you to the online statements. We're still hoping that as much M&S comes in as possible, obviously to support the broader work of the church. Again, that's money that's already gone back out for its mission purpose. The 2020 national church statistics, there's a couple of interesting wrinkles. One is on government revenues. Obviously they're not going to count for assessment, but a lot of people have been asking how you should measure attendance for October and November. So we've issued a couple of statements on that. We think there's, so many of us have actually got more people participating on online Sunday mornings than we ever had, bums in seats type things. So we basically, there's some specific guidance out on that, but basically we should count the electronic folks, because we'll probably need to be measuring church participation differently in the future. On the insurance front, I've already talked about the email that treasurers will get, either in English or in French, with regard to the D&O. You only have to respond if you have something to report. And believe me, do report, because otherwise you could be left without coverage. Many of you will be asked for applications for insurance. Like the renewal process has been automatic for a number of years. My own church couldn't even find the last time it filled in an actual application. I certainly couldn't. The last one I found was 2005. But the point being that the whole insurance industry has tightened up, and it's kind of nervous and jumpy, and there's more requirements. Next slide.
Sorry, there it goes.
Okay, so this is just the usual list. Again, if there's any new folks, some of the contact areas, get the whole CRA set up. If there's still folks left, CRA helps with that. Your inquiries around ADP, please go sparingly with that. If it's following up on the 10%, we're almost there. But Eileen and her team there do a great job. So reinstating assessments, a fair number of you have been reaching out to us to go back on par. A perfect world for us from a administrative point would be great if you could send us the money electronically. Our offices are still semi-closed, and frankly, it's faster and more efficient for all of us if you can send the money electronically and potentially get your any regular payments set up on pre-authorized for the coming year. Church loan repayments. Right now, the plan is to start for those who have church loans to reinstate payments starting in January, but we will look at that on a case-by-case basis. Most people are fine with that. If it's a problem, let us know. Next slide, please. So this is bit of question time for folks, and I'm happy to field anything you've got, and if I don't know,
Okay.
Clyde will.
Well, no, you've explained things so perfectly that there have been no questions at all.
Ah,
Oddly enough, no, I'm sorry, I lied. There are a few on my list here. Okay, let's scroll back to the Qs. Dividends on our investments, is that revenue for Qs? I think Clyde said yes, but Cheryl's just double checking.
yeah, my answer, let's see if Clyde's is different. Like, again, some of this is fuzzy. If it showed up in your bank account, yes. If
That's
it
right.
showed up in your investment account, no.
Okay,
That's right.
thank you. Okay, gosh, I've got more questions coming in and I can't look at two places at once. Does ADP need to know how much money we got in the Qs program?
No,
Thank you. Ray says we were unable to have ADP handle our TWSE, and we then amended our Qs applications to account for that. So the grant we received was all Qs then, or did we get TWSE as well? And how do I know? Says Ray.
did you deduct anything from your payroll remittances?
Okay. Thanks.
That's the trigger to use.
So I would say, Ray, double check that, and if you got a specific question, send it to CRA help at United.
Yeah, absolutely.
Church.ca.
Yeah.
Sometimes these very specific situations you'll get better answers than you will on a national webinar where we're trying to cater to 250 people.
But I'll just offer the general comment that the bucket, like if you had ADP do it for you, or if you took it yourself, if you took money from the income tax bucket, then you needed to report that and adjust for it in your Qs application. In addition to that, the Qs application anticipated that you would subtract that for those early periods.
I can make one comment on that. When when you fill out your PD 27, the government's going to assume that everybody applied for Qs or qualified for it. If you did not, for the TWS, okay? If you did not apply for it, you might expect a check in February to pay it back to you once they've done all the reconciliations with your tax returns and your remittance payments, because they're making that assumption.
Yeah. All I'm going to say, Clyde, that's conjecture, though. Like logically, that could work, but the system is so rushed right now that I would not bet my house on that.
Yeah.
Well, there's one church has already received a phone call because they submitted their form and said that they were going to get a payment back because they didn't deduct enough.
Yeah.
So to me, that says they're working that way. That's what they said they would do.
Yeah.
Sounds good. So again, if you've got specific questions about your own church, it's probably better to direct them straight to that email address, and we'll give that to you again at the end. I'm going to go on to some of these SEBA questions. One of the big questions that seems to be coming in here is it just that we have to have deferrable, non-deferrable type expenses, or do we actually have to have spent that money and be in the hole before we're eligible for this loan?
No, you have to have the non-deferrable expenses. That's all.
So even if I've got extra money in the bank and I don't need the loan to stay afloat, I'm eligible for it because my church has has these non-deferrable expenses.
That's right.
Thank you. And that's several people have asked about that. Somebody's saying somebody's asking about how T4A slips are prepared for pulpit supply and stuff. Does ADP do that? Do we do that? How is a T4A done?
Well, you need to answer that question yourself. ADP, and Clyde, you're more hands-on than me. ADP does offer it as a service, but a lot of folks do it locally. One way or another, you need to report it.
Thank you.
Quite right. And it's much easier and less expensive to do it yourself because there is obviously a fee for service.
Yeah. In my congregation, we do the T4As ourselves. The T4s are done by ADP. Okay. If we haven't yet applied for the SIBA loan, can we do that now for the total 60 grand?
I believe so.
And you said the application deadline was the end of the year, right?
Right.
Yes.
Thank you. Couple of insurance questions here.
Just before you jump into insurance, let's stay with
Yes.
SIBA for a minute. I saw a question up there about the accounting for it.
Okay.
The
Thank
government,
you.
the government rule that they've come out with is that you have to take the part that we're going to be forgiven into revenue in the year you received the loan. So even though you're not going to see the deferral until next year or 2022, you still have to take it into account in 2020
Okay.
and set the balance of it up as your liability as a loan to be paid.
So Clyde, could you just give us that in numbers as well? So I get my $40,000 loan today.
You get your 40,000 today, you take 30,000 and set that up as the loan payable in your as a liability. And that's where you make your payments from. But the other 10,000 goes into a revenue under government grant. It's just another one of the grants in the revenue stream.
So it's 2020 revenue, government grant revenue.
That's right.
Right.
Even though you might not qualify for it in 2022 by paying off the loan.
Yeah. And
Okay.
if you end up not qualifying for it later in 2021 or 2022, when you pay the loan down, or when they do their audit on it, then you take that back into expense at that point. It works.
Okay, thank you. Here's a question, interesting one from Anne Yates LaBerge. I am absolutely confused about the CECRA's relationship to the SIBA, the additional loan. The CECRA, of course, is the rent subsidy. So this is a congregation that clearly offers rentals and has been a landlord. She says, we were required to offer 75% rent reduction for the first 3 months to our tenants. I understood that we could only increase the SIBA loan if we extended the rent relief for July, August, and September. Is that true? Is there a connection between those two?
I've never seen a requirement to be connected between the two.
Yeah, I think everything I've seen would say those are completely unrelated.
Yeah, they're two standalone programs. In my congregation, we continue to offer the rent reduction to our daycare. So they paid us their 25%. We got the 50% through the loan program. We ended up only getting 70%, 75% total. So for July and August and September too, that was because that rent reduction program was continued on the same basis. But it wasn't related to the SIBA loan. That was they're two separate standalone programs, as I understand it.
Totally separate.
Thank you. Edna is saying, is there a 1-800 number to check on the progress of our SIBA application? We applied through Scotiabank in the middle of July. We got ours within days. Have you heard of it taking that long, anybody?
Well, it's Eric. Edna and I have certainly had some dealings on this. It's really hard to know. I think the way to press that is at the local level. Edna's being told that it's hung up somewhere with the federal government and so on. I don't think so. This program is administered entirely by the bank, and I'm even going to go so far as to mention Edna's bank. The Bank of Nova Scotia has been especially challenging for us in different parts of the country. And it might be appropriate to try. I could even try to give you one of our letters if I haven't already. I'm trying to remember if I have. But just to stress that, yes, we are eligible. What's left to discuss?
Yeah, and Christine is saying we were denied, but it took a long time to find that out. We had to contact especially loan officers. officer. She thinks they didn't have enough business income at lines 4610 and 4630. So that's maybe where it got hung up. That's where it got hung up for Christine. Maybe it did for you too, Edna, but
Yeah. And Christine, it would be interesting for me if you could email me. I'd appreciate it, because if there are amount thresholds, it would be good for us to know what they are. I have not seen that.
okay, thank you. Heather says, if we prepared the TWES claims ourselves, instead of having ADP do it, can ADP now provide us any information that would help us complete the PD27 form?
That's
Through your
interesting.
regular payroll reports.
Okay.
That's all I would do.
Yeah, just pull it out of the payroll reports. Okay, thank you. Fred is saying, I assume that if we're considering salaries as non-deferrable expenses for that CEBA loan process, does that mean net of the wage subsidies, or how does that work?
I would
So go ahead, Clyde.
I would go on gross salaries, because these are grants to help you for other purposes, just based the calculations on salary.
Okay.
Yeah, and I'm going to answer that slightly differently. And believe me, this isn't because we disagree. This is just the CEBA programs do talk. It does talk about having at least that amount of non-deferrable expenses. I think the government is going to look at merging like the various supports together, but most of you will have net expenses, even if you count the wage subsidies.
Yeah.
So some of the language does talk about looking at them both, but generally we should be okay.
Thank you. Robert says, way back in the Middle Ages, we applied for the 40,000 CEBA loan originally before we were eligible to do it. We attested to the wrong information. How do we fix that?
My answer is I wouldn't bother. If you want, you could, and if it's available online, you could sign a current one because it's true. But,
Okay.
but more to the point, the rules changed in response to lobbying, and because there was an intent for you to be eligible, I wouldn't worry about it.
Thank you.
I mean, you've got this technical window of being offside, but hey, you're a volunteer treasurer. There's a limit.
Yeah. Thank you. Okay. I'm going to move into insurance questions here, and the big one really is about real estate values and have gone. What should we be reporting? Do we need to get a new valuation on our building? That seems to be a couple of people who've been talking about that.
Okay. Again, it depends. If you're with the nationally sponsored program, what's called UCC Protect, they have a sort of a simple valuation tool. It's just a one-pager type thing that you fill in around square footage and type of construction. That's the way. That's what I would recommend if you want to check your valuation. Getting a full valuation costs, in some cases, several $1,000s, or at least one or two. And lots of us like to avoid that if we can. If you use the tool that our national broker provides, that leaves you in good stead. It shows you good faith trying to maintain your values.
Okay, thank you. I'm kind of scrolling through here, not noticing anything really substantive that we haven't already addressed. Clyde, is there anything you've noticed that I've skipped over by mistake?
The only one thing that I've noticed here, somebody is talking, and it's the very last one that came up. Somebody's talking about emailing something with a SIN number.
Yeah, the T4As.
Never email them out there. You can do it with the signed authorization of the person receiving it, but it's got a SIN number. I wouldn't do it. I wouldn't even go after an authorization.
Email isn't secure.
No,
which is why ADP always wanted faxes. With any luck, the people who are getting T4As are close enough to the church that they can drop in and pick it up. Or you can put it in the mail to them.
Or you can drop it in the mail.
Yeah.
Sake of $1 stamp on it, it's not too bad.
So Rose is saying, if you got an insurance claim for damages still outstanding and we transfer to a new carrier, how does that work?
Well, two things, Rose. One is first of all, the claim stays with the original insurance company is the one that still owns that claim and will adjudicate it and so on. In the case of directors and officers, which is where we're making a change, I don't know that there even are any claims. If you have one, you can let me know, but you probably don't. But just generally, if you're changing insurers, the claim stays with the one you reported it to.
Just so that you know, for those that are on with their cameras on, if you saw Rose just waving a few seconds ago, that's our CRA help. She is one of the main ones on CRA help.
Yeah.
Yeah, no, if her camera pops for you, say thank you, because Rose has been wonderfully patient and quite the problem solver, charming the CRA folks.
Okay. Here's your last kick at the can, folks. I'm not seeing other questions that that I think are general enough to be valuable on a national webinar like this. In the last 30 seconds, if you've got a question, start typing.
And Rose, read the chat box because you're there.
I saw a chat box question about how to source this tool. If you sent an email, I don't have the email in my head here, but it's an easy Google or off our website, or if you look at insurance on the United Church website, if you either email or phone, and I recommend email, so there's a nice audit trail, Hub, our broker, saying that you'd like to do that valuation tool, they'll make sure it happens.
Great.
And feel free to copy me as well.
Sure. So if you don't have Eric's email address, I don't have it in my head, but I just put my own in there. So I will forward anything that comes in. We are collecting questions for the Ask Us Anything webinar at the first week of December. So send those to us and we will build a webinar based on the questions you're asking. So send those to us, send them to me, and I will forward them on to Eric, and we'll use those and try to address everything that comes in as you're preparing for year end and trying to move into 2021 and getting things organized there.
And there's one thing I wanted to answer, Bill. I think it is a typo. If I said 4630, I think it is line 4640, sale of goods
Thank you.
and services. I apologize. He was questioning whether it was a typo. I think it is.
I think it is too, but
Yeah.
you have to have a significant dollar there, but nobody would tell me what significant dollar is. In other words, don't just put up a small fundraiser.
Yeah.
Right.
Well, in fundraiser, 4640 is sale of goods and services as opposed to fundraisers. So it's
but some of them report it differently.
Okay, folks, you made the regulars, and there are many of you will know that we sometimes have a prayer or a poem finishing at the end. Tonight we're going to finish with the most current post-Thanksgiving mission and service video. Just a reminder of what we're all trying to do locally, and nationally and around the world. So Steve, if you could cue that up, I'll say thank you to everyone. We're back November 25th with obviously any news on the various programs, anything we've learned, but also a focus on getting ready for 2021. And I do expect to have more payroll news for you then as well, in terms of doing away with fax machines.
Okay.
So
hooray.
Steve, if you could cue that up, that would be great.
I sure would. And just before I do that, I'll say thank you to Eric and to Clyde and to all of you who've been a part of this. And to remind you that these webinars are not part of the mission and service we're about to talk about. These are paid for by your denominational assessment. So when you're sending in that denominational assessment and wondering why those awful people in Toronto need money, it's so that we can do this kind of thing with you. And it's an honor and delight to be with you. So thank you for your support of mission and service. Thank you also for your support of our whole denomination and a wide variety of ministries that we're part of. Let's have a look at this new video. So love is up to us. I don't think there's a better way to end. Thank you. Thank you, Eric. Thank you, Clyde. Thank you, everyone. We'll look forward to seeing you at the end of November.
Great.
Clyde and Eric,
Thanks,
if you want to
everybody.
hang on just a second, I'll take us into a breakout room so that you
Okay.
guys can debrief.
And I think that video is on YouTube for anyone who wants it.
It is, and there's, oddly enough, there's a link at the recorded webinars page, which you can all go and access along with everything else we've looked at tonight.
Okay, thank you.
Take care, folks.